Hey guys, are you wondering how inflation is going to affect your income taxes? Well, in this video, I am going to explain to you exactly what that's going to look like. We've been hearing so much in the news about inflation. Inflation has gone up to 7%. Gas prices have gone up. Food prices have gone up, used car prices have gone up, and a lot of you are wondering, am my income taxes going to go up? Well, first, let me explain to you what inflation is and what my understanding is. Inflation is where prices go up so high, so quickly, and our ability to purchase the same thing, say a year ago, has decreased. So for example, it may have cost me $300 to feed my family for a week a year ago, but maybe now it's costing me $400 to feed my family for a week. Because it's costing me more, my purchase power, my ability to purchase more goods has decreased. That's when we get inflation, meaning that prices are soaring so much, my ability to purchase the exact same things I was able to purchase a year ago, a month ago, is not the same. I can't purchase as much as I used to. So inflation is really hurting working Americans, people that have to function every single day because our incomes are not keeping up with the rate of inflation. How is inflation impacting us in other areas? Well, you've seen it. You've seen it at the grocery store when your groceries are higher. You've seen it when you go to fill your car up for gas. I know a lot of you have seen just how crazy this housing market is, and people are still out buying. And with the hiccups that we're having in the supply chain and the inability for us to get certain goods and services, it makes the prices even go higher. So inflation is going through the roof. So what does that mean for your income taxes? Allow me to explain. Every year, IRS looks at the income tax brackets. That means the rate in which taxpayers will pay income taxes. There are currently 5 tax brackets that taxpayers are concerned about. You may hear, I'm in the 10% bracket. I'm in the 27% bracket. Those brackets are increased every single year as inflation happens to make certain that about the same amount of money that you were taxed in the 20% tax bracket last year should be about the same amount of money that's going to be in the 20% tax bracket this year. But unfortunately, with the way inflation is increasing so rapidly, IRS has not been able to adjust the tax brackets as fast. Have they made adjustments to the tax brackets? Absolutely. They certainly have. A married couple, for example, would have to make more than $20,000 above what they made in the previous year in order to see an increase in tax. However, many Americans are making more money. Because of the labor shortage, employers are increasing employees' pay at a rapid amount. Employees are leaving jobs and they're going to other jobs and their pay is increasing. So you're going to find yourself in higher tax brackets, even though every single year IRS makes adjustments to at least 60 different tax brackets, categories, and so forth to try to mitigate the bite of inflation. Let me give you some examples of the different types of brackets that IRS will adjust. IRS will adjust the traditional tax brackets. Again, the 10% bracket, the 15% bracket, the 27% bracket, just the amount that we will pay in tax. IRS will adjust that every single year. IRS will adjust up the amount of the standard deduction. So for example, if last year your standard deduction was $12,000 as a single person, the next year IRS is going to increase that standard deduction amount and they're going to increase it to help with inflation. If you're a married filing joint, the standard deduction is going to increase to help with inflation. So every year they make adjustments to about 60 categories to help mitigate the bites of inflation. But I want you to rest assured, it's not going to be enough because certain other areas that are really important to us as taxpayers don't get adjusted. Let me give you some examples of what doesn't get adjusted. If you wanted to contribute to an IRA, the maximum amount that you could contribute to an IRA as someone 50 and below is still $6,000. That didn't increase. If you are 50 and above, you got a little bump, but the amount of the bump was $1,000, and that still hasn't increased since the last few years. If you are someone that owns a home, they decrease the amount that you can write off in mortgage interest because they decrease the amount of a mortgage that you can carry. They took it down some years ago from $1 million down to $750,000 in a mortgage loan that you can carry and still get the full interest right off. Yes, you can have a mortgage that's $2 million if the bank could give it to you, but you can only write off interest on the first $750,000. Where I live in California, that's probably like the medium home price. So a lot of people that have gone out and purchased homes are not even going to see the benefit of the mortgage interest that they're currently paying, because even though IRS has increased brackets in some areas, that is not an area in which they have increased the bracket. It still is at $750,000. Also, the personal exemption remains at zero. That means a write-off for myself, a write-off for children, a write-off for your spouse still remains at zero. That bracket has not increased. So as much as we hear IRS is making adjustments to accommodate inflation, they're not making adjustments to accommodate the things that are really going to be impactful for taxpayers. We are losing money with the consumer price index increasing, with inflation increasing. We are losing money because our spending power is diminishing. The amount that we're going to have to pay in income taxes is going to go up because they can't inflate the tax brackets as fast as inflation is increasing. So we're going to see inherently larger tax bills because of inflation. That is typically going to be the pattern. IRS can't increase it as much as inflation is increasing. In addition to that, when we see prices going up and we see that our tax bills are going to go up, people are going to start to cut back on their spending. Businesses are going to start to cut back on their spending. Why? Because their purchase power is also going to diminish. If purchase power is diminishing and people are cutting back on their spending, that means there's not going to be as much money in circulation for people to actually buy goods and services. Even though you're going to see a bite in your tax bill, it is increasing. What does IRS typically do from an audit perspective when we're in an inflationary time period? Well, I did some research for you, and historically, I kind of knew what was going on, but I wanted to make sure that I brought you the right information. So let's talk about where audits have been over the last few years. Audits have actually decreased over the last 5 years. A lot of IRS staff has retired. A lot of audits that they were doing, they pulled back on because IRS did not have the money to increase its audit staff. So a lot of people have not been receiving audits, so they have definitely been decreasing. However, in the recent tax law bills that have come out, there has been a surge of money that has gone to the Treasury Department allocated to the Internal Revenue Service. And in their master plan, strategic plan, one of the things that they have been talking about is increasing their ability to audit taxpayers. I know that IRS's job is to gain revenue through the collection of tax for our government. They are the collection agency for the government. So from my perspective and from where I sit and my knowledge base of having done this for a very long time, we're going to start to see a ramping of audits in the next 3 to 4 years. You're going to start to see that. My best guesstimate is we're going to start to see that as we go into tax year 2023. I believe that audits are going to increase. IRS is doing massive hiring. They know that there is going to be a contraction of the economy, because people aren't going to be able to spend as much as they're spending. If people can't spend, employers aren't going to be able to keep employees on record. If employees are not going to be on record and they're going to start to lay off eventually, that means that there's going to be less taxes being paid. When less taxes are being paid, what does that look like? That looks like the government is going to have to do more to make its budget. It's going to have to do more to make sure that it collects more tax. Just like if our budgets tighten up, we're going to have to slice back more spending on our personal worlds to make sure we're able to pay for our cars, our housing, our rent, our mortgage, our food. We have to tighten our belts. So the government is going to get out there and work harder to tighten its belts. And one of the things that it does in order to do that is that the government increases audits. When there's lean tax collection, the government increases audits. Just like if there's lean times in your household, you're going to slice back on what you spend, and might go pick up a second job, or you may try to make more money in your business. Well, let's think about the government. What do they have at their tools in their toolbox? What they have in their toolbox is the ability to increase audits, the ability to go out and audit more people to try to collect more tax. That is the tool that is in their tool chest. So what should you be thinking about? What should you be doing as a taxpayer to make sure that you're prepared for these things? Well, number one, knowledge is always power. Be aware of how inflation is affecting you as a taxpayer. Understand what's coming. Understand how to prepare for that. Now is certainly the time to make sure that you are keeping your financial records, your house in order in terms of dotting your I's, crossing your T's, and being prepared because it's coming. Be very mindful to make sure that you take advantage of every single tax deduction, tax credit that you possibly can. As I was sort of preparing for this story, I did some research. I went out and I looked at different research places. Like I love to read the Wall Street Journal. And on the front page of the Wall Street Journal, it's talking about inflation. Forbes is talking about inflation. IRS is talking about inflation because they know it's coming. I need you to be prepared for it, and I'm going to continue to educate you so that you understand what it is that you need to be doing. If you enjoyed this video, I want you to like, comment, and subscribe, and I can't wait to see you and educate you on my next video.